In today's show, we'll be talking about the 5 things to watch out for in the Bitcoin market this week, including an even bigger mining difficulty drop, according to data from BTC.com. And as dilution-proof tweets here, after yesterday's record-breaking 27.9% difficulty adjustment, Bitcoin's difficulty is now similar to the levels after last year's halving event. Price, however, is 263% higher. This illustrates how incredibly profitable Bitcoin mining has become for efficient miners. And as Rec Capital tweeted, once Bitcoin is able to clear 36K, next major resistance will be the $38,000 area. Not only is this the range high, the macro consolidation range Bitcoin is in now, but the 2 Bitcoin death cross EMAs will likely act as confluent resistance there too. I'll be breaking this down for you. Also in today's show, Bitcoin supply shock now in play, says On-Chain Analyst Will Clemente. Quoting him here, Bitcoin is now in heavy accumulation, supply shock in play. There's been a clear bullish divergence and strong hand buying versus price, but check out that big spike printed last night. This force is pushing up against the price. Also in today's show, popular analyst unveils his year-end target for Bitcoin and says he's selling once Bitcoin hits this level. We're talking about crypto Kaleo. He tweeted, basically my game plan is to be uber bullish until Bitcoin breaks above $150,000. I'll start exiting there and flip uber bearish when it breaks back below 150,000. And he continues, still think it tops out with a nice wick around $185,000 to $215,000, but my goal isn't to snipe the top. Also in today's show, we'll be taking a look at the overall crypto market. As you can see, after the weekend pump, Bitcoin, Ethereum, and most major altcoins are back in the red. But where's the Bitcoin price likely to go next? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button and hit that bell icon to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And before I kick off today's show, today's episode is brought to you by our sponsor, BlockFi, the leading provider of financial products and services for crypto investors. Here's where you can put your crypto to work and earn up to a 10% APY on select stablecoins. And their new flagship product is a BlockFi Bitcoin Rewards Visa credit card, where you earn 3.5% back in Bitcoin on all purchases. They also recently ditched their annual fee, truly making this a no-brainer to take advantage of this offer, as well as receive up to a $250 crypto bonus with a deposit of $100 or more. Go ahead and use my referral link in the description right down below. Let's start stacking those sats and claim your BlockFi Bitcoin Rewards Visa credit card today. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. We have a lot to cover, so let's dive right in. Bitcoin starts a new week in familiar territory. After a weekend of solid gains ended in a drawdown. What's in store after this stalemate? With another rally to near 36,000 under its belt, the largest crypto is showing signs of strength, but old resistance levels still remain in place. The conditions are complex. The ongoing miner migration coming out of China and associated price action have alarmed many, and Bitcoin's most accurate forecasting tools are seeing a real test, such as the stock-to-flow model. Now, with fundamentals finally showing signs of life, however, the bulls may finally have something to celebrate. Now, for the 5 things to watch out for in the Bitcoin market this week. Number 1, stock records and the oil feud. That's right, the S&P 500 is seeing new all-time highs for 7 days straight. And encouraging economic data from the US plus the Fed keeping interventions have pushed the equities index ever higher in recent weeks. Markets are priced for the continuation of a scenario that could not be better constructed, says Chris Ego, Chief Investment Officer for Core Investments at Netherlands-based AXA Investment Managers, who summarized in a note quoted by Bloomberg, an interesting twist is oil now at the center of another OPEC plus production now, which is itself gaining but sparking concerns about how much fuel will be available in August. And with the US dollar steady, it seems that the equities narrative is the likely driver going forward. This scenario traditionally helping the Bitcoin price action. Right here, you're looking at the S&P 500 one-day candle chart. Now for the second factor to keep your eyes out on this week in the Bitcoin market, the fundamentals aren't out of the woods just yet. That's right, Bitcoin may have just seen its biggest ever difficulty decrease this weekend, but even that may not be enough to steady the ship. At 27.94%, that makes it the largest Bitcoin difficulty adjustment in Bitcoin history, also reflecting the impact of China's war on mining on the Bitcoin network. And according to data from monitoring resource BTC.com, the next adjustment may see an even larger drop, as difficulty adjustment adjustments can only ever be estimated before they actually take place. And of course, a lot could happen within a 2-week time period. So it's difficult to say just how much the metric needs to decrease to reflect the true state of the Bitcoin network. And given the latest drop, mining is now significantly more economically attractive to many current and potential participants. As such, in the coming 13 days, more miners may well begin operating, increasing the hash rate and thus perhaps mitigating the need to decrease the difficulty much further. And a look at hash rate activity in recent days shows that a U-turn may already have taken place, with the hash rate spiking above 90 exahashes per second versus the lows of 83 last week. And at the time of this recording, Bitcoin is on track to lower difficulty by another 28.68%. Now let's check out this tweet from Dilution Proof. After yesterday's record-breaking 27.9% difficulty adjustment, Bitcoin's difficulty is now similar to the levels after last year's halving event. Price, however, is 263% higher. This illustrates how incredibly profitable Bitcoin mining has become for efficient miners. And right here, you're looking at the Bitcoin difficulty 7-day average chart brought to you by blockchain.com. Now, for the next factor to keep your eyes out on this week is the Bitcoin price action spooked at 36,000. At least the difficulty drop had good timing. Once in, the Bitcoin price action saw a welcome boost and climbed back toward the upper bound of its trading range. And throughout the rest of the weekend, Bitcoin saw little by way of resistance and added around 5% before retracing here this morning. As you can see here, you're looking at the Bitcoin 1-hour candle chart. Now, what could tap the enthusiasm further? For popular analyst Rec Capital, 2 now infamous moving averages may be bears' best friends in the coming days. That's right, Bitcoin saw a death cross event last month. This refers to the 50-day moving average crossing under the 200-day moving average, an occurrence that is traditionally regarded as a bearish signal. But in reality, death crosses have not always led to price losses, but their reputation remains firm this year. Now, current price strength may get a taste of reality should Bitcoin reach either moving average, currently floating above the spot price. Quoting Rec Capital here on Twitter, once Bitcoin is able to clear 36,000, next major resistance will be the $38,000 area. Not only is this the range high of the macro consolidation range Bitcoin is now in, but the 2 Bitcoin death cross EMAs will likely act as confluent resistance there too. And here you can see the 2 death crosses. The 50 is the blue and the 200 in black. We also have crypto analyst Crypto Ed, who warned on Monday that the weekend's ground would ultimately be lost again, as he shared in this tweet. Full retrace coming up. He said, arguing that the market needed proper retest of lower levels in order to fuel a true bullish resurgence. Bitcoin corrected from highs of 35,900 to bounce off of 34,000. Now, for the next factor to keep your eyes out on this week is the volume fails to buoy the bull case. That's right, the weekend rally was suspicious for those eyeing one classic market trait, which is the volume. Despite the brisk pace of gains, volume supporting then remained low, and as such, their reliability and ability to sustain themselves was in question from the outset. On Monday, on-chain monitoring resource CryptoQuant noted that volumes are still declining, pointing to a lack of interest from major prospective buyers. Both inflow and outflow are drying out with the trading volume in the market. Seems like the whales are staying low without much actions, the firm said in a blog post, along with the following: push to either side of the market would have a high possibility of triggering a relatively big reaction to the price. And on Saturday, however, statistician Willy Woo noted an instantaneous uptick in Bitcoin entities holding large amounts of BTC, a classic signal that the whales are definitely interested. This followed the downward difficulty adjustment. And other investor profiles are also getting in the spare Bitcoin supply, notably the so-called Rick Astley type or hodler of last resort. Checking out this tweet from Willy Woo, LSR is the ratio of coins held by Rick Astley versus weak-handed speculators. As speculators continue to sell down, Mr. Astley, the buyer of last resort, is mopping up coins. The classic on-chain divergence unseen since October of 2020. And he continues on in this thread. Translation, Mr. Astley is saying, shorters gonna get wrecked. So there you have it. He also points out that the last 3 times the LSR crossed into these levels, the price was between $50,000 and $55,000. Now, for the 5th and final factor to be on the lookout for this week in the Bitcoin market is investor confidence is slowly returning. That's right. The question is traditionally answered by the Crypto Greed and Fear Index, one of my favorite indicators, which shows we're currently rated a 29 in fear, and yesterday was a 27 in fear, moving away from that extreme fear we were stuck in all fall of last month. Today's score, which is a 29, is the highest this has been in the past 3 weeks. The last time this happened, Bitcoin was on its way to June's local top above 41,000. Fear and greed uses a basket of factors to deliver sentiment estimates for crypto markets and thus helps identify when assets are overbought or oversold at a specific price. And before I break down our next story of the day, Bitcoin supply shock now in play, says On-Chain Analyst Will Clemente, as well as popular analyst Unveils his year-end target for Bitcoin and says he's selling once Bitcoin hits this level. But first, let's take a quick look at the overall crypto market cap. After a nice weekend pump, we're currently correcting back in the red. Bitcoin down 5.3%, trading just above 33,500. We have Ether down 4.6%, trading above 2,200. Binance Coin down almost 3%, trading at $294. Chainlink down 4%, trading at $18. And Polkadot down 5%, trading just under $15. All right, now let's break down our next story of the day. Emerging on-chain analyst Will Clemente says he's closely watching the activities of two types of Bitcoin investors as Bitcoin continues to trade above the $30,000 level. Clemente tells his 129,000 Twitter followers that a supply-side crisis may be on the horizon as investors with strong hands or with little history of selling pounce onto Bitcoin amid its downward price action. Quoting Clemente here, Bitcoin is now in heavy accumulation, supply shock in play. There's been a clear bullish divergence and strong hand buying versus price. But check out that big spike printed last night. This force is pushing up against price, which you can see right here on your screen. It shows you the Bitcoin liquid supply ratio. The popular on-chain analyst adds that the whales or entities which are holding more than 1,000 BTC have purchased tens of thousands of Bitcoin in a short amount of time. Quoting Clemente again here, and check out the spike in whales. Whales added 64,137 BTC to their holdings just yesterday alone. Check it out. Bitcoin entities with balances of 1,000 BTC or more on the rise. Now, according to Clemente, the heavy accumulation of whales and strong hands comes as the amount of Bitcoin stored in exchanges saw a significant decrease in the last 7 days. Exchange inventories are down 24,259 BTC in the last week, now trending sideways bullish, as you can see right here on your screen. And Clemente says that looking at the on-chain signals makes him bullish on Bitcoin in the coming months. He tells his followers to look at the clear bullish divergences in September 2020 and January of 2021. The analyst also suggests that the heavy buying of strong hodlers during those months preceded the significant rise in Bitcoin's value. So there you have it, supply shock in play. Let's go. And before I break down our next story of the day, popular analyst unveils his year-end target for Bitcoin and says he's selling once Bitcoin hits this specific level. But first, let's take a quick look at the overall crypto market cap, sitting above $1.4 trillion with $62 billion in volume in the past 24 hours and current Bitcoin dominance at 44.7% with the Ether dominance at 18.5%. Now checking out the top gainers within the top 100, we have synthetics up 18% for the day and 41% for the week, trading at $9.10. The graph up 17% for the day and 44% for the week, trading at 78 cents. And Cosmos up 8% for the day and 33% for the week, trading at $13.34. Now checking out the top losers within the top 100, we have ICP down about 7% for the day, but still up 14% for the week, trading at $46. Decred down 5% for the day, but still up 6% for the week, trading at $137. And FTX token down 5% for the day, but still up 6.4% for the week, trading at $26.39. And out of this list of the biggest gainers and losers, which altcoins in particular are you currently most bullish on? Let me know in the comments right down below. Also want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. Also have some very helpful resources for you to plug right into, including my daily letter, which goes out to over 30,000 subscribers every single day. Also have a blog I update daily, which can be found at cryptonewsjust.com. Also be sure to smash that subscribe button and hit that bell icon to turn on all notifications and receive daily premium crypto news alerts. You can also find me on all the major podcasts and platforms from Spotify, iTunes, and Google Play. You can also follow me on crypto Twitter. My Twitter handle is Crypto News Yes. You can also find me on Facebook, Telegram, and TikTok, so be sure to follow me there. All right, now let's break down our final story of the day. A popular crypto trader and analyst says he plans to scale out a Bitcoin once Bitcoin hits a certain level. Crypto Kaleo, a trader who amassed a large following in the current market cycle, tells his 329,000 Twitter followers that Bitcoin will likely surge more than 520% from its current value value of around 35,000 by the end of this year. Checking out his tweet right here. Basically, my game plan is to be uber bullish until Bitcoin breaks above $150,000. I'll start exiting there and flip uber bearish when it breaks back below $150,000. So I think it'll top out with a nice wick around $185,000 to $215,000. But my goal isn't to snipe the top. And then he goes on to share that December/January seems pretty likely, but we'll see. So he's ultimately predicting $185,000 to $215,000 Bitcoin price range by this December/January. Let me know if you agree or disagree with his bullish price prediction in the comments right down below. And although Bitcoin continues to trade sideways between $30,000 and $40,000, while sentiment remains largely bearish, the crypto strategist says that Bitcoin is correlated with the tech industry, and by comparing the price of Bitcoin to the NASDAQ 100, he predicts that the king crypto will eventually catch up to the tech industry's rapid expansion in the last 2 months. Bitcoin versus tech. Most of you will be too lazy to read this, but for those who aren't, I think you'll find some useful data. Pay attention to the 2 red boxes. Bitcoin will catch up and close the gap to the growth we've seen in tech, and when it does, it'll happen rapidly. Now I'm going to read to you these 2 important red boxes. Number 1, you can see on the left side of this chart, tech expands rapidly. Bitcoin is relatively boring, stuck in an extremely tight range and slightly declining. This was May/July. And the second red box reads, tech completes recovery after 4 months of accumulation from February's peak and expands to new all-time highs. Bitcoin slightly declines, remaining in $30,000 to $40,000 lower range. This is May/July. So according to Kaleo's chart, the tech industry has been a reliable indicator of Bitcoin's future price action since the Novid-induced sell-off in March 2020. He also predicted that the leading crypto would significantly outpace the tech industry once the next leg of the bull market resumes, quoting him again here, when they realize the market is bubbling out of control, aka tech bubble 2.0 narrative, Bitcoin will catch up to tech, and once again it will outpace it at the peak of the madness. So there you have it. Let me know if you agree or disagree with crypto Kaleo and his bullish price predictions for the king of all crypto. Now for a quick recap, what I covered with you here in today's show, I shared with you the 5 things to watch out for in the Bitcoin market this week. Also shared the latest from Crypto Ed, Rec Capital, as well as dilution proof. Also in today's show, we discussed the Bitcoin supply shock now in play, according to On-Chain Analyst Will Clemente. Also in today's show, we discussed popular analyst Crypto Kaleo unveiling his year-end target for Bitcoin and saying that he'll sell Bitcoin once it hits this specific level, that specific level being $150,000, and he's predicting $185,000 to $215,000 Bitcoin price by this December/January. But where do you feel the Bitcoin price is likely to head next? Let me know in the comments right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button and hit that bell icon to turn on all notifications to receive daily premium crypto news alerts every single day, just like this.